In terms of the framework review, and a little bit on Chris's question earlier, there is a general feeling now in the markets and among analysts that you're basically setting us up for some form of inflation target averaging where you let the inflation rate run above the 2% target for some time to make up for the time that it is spent below that. Is that a fair or reasonable assessment of where you think you're going to end up? What would you, Chairman Powell, think of that idea personally? And as long as I'm asking, do you have any more details on when we can expect the results of the review?
Thanks. I'll just say that we undertook the review because we felt, and I felt, that it was time to incorporate the realities of what we could call the new normal into our policy framework. And some aspects of that new normal would include ongoing, powerful global disinflationary trends, which have led to lower than target inflation many places in the world. Secondly, a flat Phillips curve, by which I mean low levels of sensitivity of inflation to resource utilization, for example, low unemployment. And thirdly, a much lower neutral real interest rate here and around the world. So those are challenging conditions for monetary policy to deliver on our statutory goals of maximum employment and stable prices. Although I would say that under our existing framework, we've been able to succeed or get close to succeeding it for most of the time lately to achieve those goals, although we do struggle, as other central banks do, with the inflation goal. So this is about reviewing our strategy, tools, and communications to assure that they're the best that we can do to achieve those goals in this environment on a sustained basis. And we continued our discussions at this meeting. I'm very, very pleased at the process so far. It's included the 14 Fed Listens events around the country at which we've engaged with a full range of people and groups across American society. That was a very, very positive experience, and I think we learned a lot. We've now had a number of FOMC meetings at which we've reviewed what we've learned and also dug deeply into strategy, tools, and communications. I expect that we will conclude the review and announce our conclusions around the middle of the year. Right now, we're just at the point of coming together to put all that together. So I think I'm not the person who should be telling you my personal preferences right now. We're trying to come together as a group around a set of answers. I feel very positive about that we're going to come up with some good results, and I'm just going to have to wait until we get to that point to announce them.